Hi, it's me. Welcome. My name is Michael. I'm the co-founder and president of BackToTheFutureTrading.com. It really is a privilege to be here with you today, and I hope everyone did well in the markets this morning, this afternoon. And if not, I have something that may help you, may not help you. If you're here for the first time today, you're checking us out as a prospect from the outside of the glass looking in, then welcome. I don't believe in accidents. I don't believe in coincidence or happenstance. And so we're here today to talk about a new way of analyzing markets that reduces your dependence on gurus and classes and education courses. I'm finding now, as we explore our own social media channels and the information we're putting out in comparison to what is being offered to the communities today, it's worse than it was than when we started 15 years ago. There's an entirely new generation of hustle culture influencers peddling things that those of us who've been around a little while have seen regurgitated over and over and over again. They surround them with fancy graphics and acronyms and abbreviations and well-produced, in many cases, AI-generated videos to get that hope and dream money away from you. And so today we're going to take a different tack. We're going to rely on 15 years of being in business, developing something that's worked as well today as it did day one, that continues to prompt people to leave 4- and 5-star reviews when they can write whatever they want. And so I think there's value there because we're taking a different tack in relation to our approach. See, there's two ways you can perceive markets. I was on the NinjaTrader live show this week. I've been a featured guest the last few months there. And I explained to the host that traders can look at the markets one of two ways. You can believe, on the one hand, that markets are fair and efficient. Everybody has access to the information at the same time, and we collectively come fundamentally to an agreement on the value of the instrument, whether that be the NASDAQ E-minis or the Emini S&P or Amazon or SPY or Tesla, any of those things. On the other hand, there may be a cabal of international power brokers, a concentration and density of wealth so intense and so large that we'd be amazed and surprised how few a number of people with such a large quantity and density of wealth can manipulate and coordinate markets in a way that they can move them upwards and downwards at will with no consequence. They never go to jail. And if they do overextend their leverage, they're very close friends and many times in cases themselves bail out themselves with trillions of dollars of parachute money. How many of you believe it's something close to what's going on this hand as opposed to the first, the former as opposed to the latter? Because if you do, then the time that these things happen is very important. I was working with a prospect earlier this afternoon, and he started to say things along the lines of, well, if you produced historical results, then people would be more inclined to believe you. All right, Tony, remember when you said that earlier? You said, hey, if you produced more historical results, people would be more inclined to believe you. And that's a dangerous path, because there are things like Photoshop. There are ways to output historical results in a way that can be manipulated. There is a tremendous temptation in this room, in every room like mine, every day, every week, every month of every year, to fudge the results a little bit, just to get that customer over the hump, just to push them in your direction. I have been the victim of said things. I've seen it perpetrated on people. The U.S. Postal Service is actively engaged in fraud investigations for people who do those things. There's only one way to prove to you, outside of my guru aura, outside of any potential contaminating manipulation, that what I'm telling you is real. And that's the experiment that we've set up for you this morning, this afternoon, wherever you are across the globe. Every Tuesday, if you're participating in our webinars, we send out an updated link to market information. And we invite people to come and see for themselves if what we're telling them is actually true or not. If our approach, based completely on predictive times and directions, is a valid approach worthy of your time. Now, this doesn't matter if it's a low, small time frame or a large time frame. I'll have examples of all of those things. It doesn't matter if you trade equities, if you're in the Indian Nifty market or the Hang Seng or the Nikkei, it doesn't matter. Time is relevant and equally applicable and accurate across all markets and time frames, unequivocally so. There's no market you're trading, there's no time frame that you're trading that this does not work equally well with. And so we use smaller time frames for the amount of attention that we have for prospects who are coming through our respective windows. Basically, we have a very short period of time to prove to someone if what we're telling them is real or not. Tony, that's why we show small intraday time frame charts. It's statistically relevant if I show someone a NASDAQ chart that has 30 times on it, as opposed to looking at NVIDIA daily charts with 4 signals. There are more data points. It's worthy of our attention. What is this chart trying to tell us? What could this chart have warned you of before we got to today's market open? And that's a curious thing, right? This chart was published by Tuesday or earlier. The times and directions are Eastern Daylight Time, and they were published before today, which is Thursday. I remember reading in the Old Testament, God instructed the Israelites, if anyone ever prophesies in my name and the prophecies don't come true, you are to stone them. How many of you are Old Testament? My father used to say when one of our neighbors got him angry every once in a while, he said, it's time for a little Old Testament. So this is in very many ways a prophecy, but it's based on behavior patterns. behavior. These times exist on a 1-minute NASDAQ chart because these moves are occurring at these times over and over and over again. That's the only reason why these times are here. Larry, does that make sense? Chris, are we tracking? Okay. Everybody on board with what we've got so far? Okay. Now, there's a difference between the signal and the setup, the raw information, and what we do with it when we get there. So, for example, if we look at the Emini S&P on a 3-minute chart today, or if we go back and look at the signals that we gave you for yesterday, there's a difference between the raw information and how we're going to trade it. If we look at the signals on a higher time frame, for those of you that are interested in such things, the information that we see is raw. They're data points, blue down, white up. But an interesting thing begins to emerge when we look at the raw data points. We start to see about 6 or 7 times out of 10 that the time we're waiting for something to occur, it actually happens. It actually comes to pass a lot of the times. And that's where we start to pay attention. If the forecasts, the behavior patterns that we're expecting are actually occurring 6 or 7 times out of 10, and the further back we go, the more evidence we see that banks are following these predictive times, then we want to sort of corral that information, right? We want to corral that information into, if we can, a trading system. So if we're looking at oil on a 60-minute chart, we get a sense that the signals are warning us about valid things more than half of the time. So if we were waiting for an 8 o'clock push up on this day, it actually went up. If we were waiting for a 10 o'clock push down on that day, it actually fell at 10, and then 9 o'clock the following day, and then 11 o'clock the following day, and then rose from 3 p.m. Eastern until 12 p.m. Eastern. There are signals that did not apply. They did not hold water. They failed. We acknowledge that, right? The banks don't do everything over and over again 100% of the time. But it appears, Yasher, and I've seen from your posts this week that your trades reflect this as well, there's a statistically relevant edge that we can expose, right? There's a statistically relevant edge we can expose. And so, Tony, I'd be remiss not to show higher time frames in other markets, right? Here's oil on a higher time frame. And if we look at the signals on the daily chart, the last 4 of them have been just about spot on. Down on July 17th, up on August 5th, down on August 26th until the 3rd, and then oil down from the 5th until the 13th, with, of course, a signal not working on 6/14. Right? We can make these arguments on higher time frames as well, including Microsoft, where we can see that actions took place, but more importantly, we know when to look for the next iteration of those actions. Everybody clear with that on me so far? Okay. So what is the difference between the setup and the signal? We get a sense, if you've been following the times, that they work, that the raw information is pointing to something important, that these moves that occur are projectable. There are little hands greased up, squeezing markets and manipulating them. Earlier this week, you saw on my NinjaTrader chart, there's a long swing trade on the Emini S&P. And earlier this week, I warned everyone on every social media channel that we're a member of that I had identified a pattern based on time. Tony, I told you about this. Told Dave and Drew and everyone in the Skype group of our community, and I said I had found that we were tracking the '08 pattern nearly identically, and that the turns in the market were being followed to almost an inconceivable accuracy. And I warned people that we were coming into a bullish week after a horrific bad news week coming home from Labor Day. How many of you remembered that post? Did anybody see that? Just give me a quick yes or no in the chat box so I can know that somebody heard my voice in the wilderness. Okay. Well, pursuant to that, we also had our warp software. And the warp software at the same moment in time was warning us of a behavior pattern. And it alerted us the same way our NASDAQ chart on a 1-minute time frame alerted us to a move up from September 6th until September 9th, 17th. I was up and had locked in $3,500 before the big drop down yesterday. And then I re-entered yesterday for a second position. And so the $3,500 plus the $5,700 is close to $10,000 so far from one daily signal. But more importantly, what is going on over here? What is going on over here? If this isn't a playbook that they're reading from, an old dusty Pittsburgh Steelers, New England Patriots playbook. All right, guys, Rutherford, sit down here. Yes, how's Ethel doing? She's doing very well. Okay, that's fantastic. All right, listen, Bryce, I want you and your high frequency algo guys take a look at this chart. We're running the '08 play again. I know we did it already. No one's paying attention. Yes, right after Labor Day, we want to really rile them up. So start quietly unloading some of our S&P. Yeah. No, not for long. Following week, we're going to start bumping it up. All right. Start bidding at the ask. No, and then we got the political debates. We're going to freak them all out for a while. And then, Bert, that's when you turn it on. All right, buddy? Open up the pipe. No, nobody's paying attention. There's some guy in North Carolina, but he's got like 40 people in his webinar. What do we care? This is what I believe happens all the time. What are the setups that we're looking for? What are the setups that I teach? It's pretty simple. Whoop. Here's what I teach every week. And I'll show you on the NQ because we have the most times and the most directions to work with. I'm looking at a 120 period moving average. All right. Can we look at the ES? Yeah, we can look at the ES and the NQ. We'll do both. Here's the ES. Sorry about the impersonation. I get a little out of control, admittedly, sometimes. Ooh, didn't start firing up till this afternoon, did it? No. Okay, so first things first. What were the times for today? Let me pull up that chart. So we have the E-mini S&P 5-minute chart and 3-minute chart. 10:55, okay, 5-minute chart. We'll look at that one first. Those times have been available since 3 days ago. 10:55, 11:50, 12:55, 10:55, 11:50, 12:55. We're using a 120 period moving average. Our EMA is a 120 period exponential moving average. We're a 1.5 average true range values away from our stop. So here, long at 705 from the close until 740. We'll increase the properties zoom of the font so you can see at home. Sorry, guys. Much better. Okay. Let's take care of the next one. 830 is the econ. If you traded the econ, we won't cherry pick here. It hits the stop. -6. The 835 signal comes. We have what's known as an aggressive counter trend trade. We'll go back to that one. The next candle closes below the moving average here, and I'm short with a stop just above that candle. So the short here hits a stop. Not looking pretty good this morning, is it? The next signal is a long at 920. I enter and it hits the stop, -6. The candle next is 1055. It closes below the moving average and hits the stop. That candle, the risk on it was tremendous, but we're going to put it there. The very next signal is 1150. It closes above the moving average. We go long. Our stop is 2 ticks below that candle. It comes back, doesn't touch it, and we're safe. We're long until 1255. We get to 135. We're long until 2 o'clock. 250 something happens. Our stop is hit. And now until the close, we get another 7 out of that. Okay. Now, the second setup that I teach is called a puncture. It's called a puncture. What we're looking for is a counter trend signal like the 1255 signal here. If it's above the moving average and the market continues to rise, we're looking at the failure of the sell signal as a trend entry. And so when it comes through the blue line, we're long, it pulls back and the stop is hit, which is right underneath that sell candle. Then it comes back into the blue line again, and I'm long, exiting at 135. So every time it comes through that blue line from below, when I'm above the moving average, I buy. I buy. My stop is right below the candle that started it all. And so I'm out and then in again. Does that make sense? Okay. When we hit the stop here, we had closed below the moving average. And now I can look for another stop. It pulls up, comes back down through the blue line, and it went a total of $20 before it came up. That hits my break even at plus 500. And now I'm out with 1 tick. That's an example of a puncture trade as well. Between 740 and 835, it comes up, it comes up, it comes up, it hits the blue line, we punch through it, and I'm out by 830 with another point. So I'm using the punctures as a way to enter in the opposite direction of the signal when the counter trend signal fails. When the counter trend signal fails. Okay, so if we do a quick online calculation, we have, we put up here, 1 plus 0.2, well, let me do it. 1 plus 0.25 plus 4.25 plus 11 plus 13 plus 7. On the winning side, we had 38 minus 8 minus 6 minus 5 minus 15 minus 7. So we finished the day in the hole minus $2.50. Not very encouraging. Okay, let's go back and look at yesterday and try it again, shall we? 7:10, we're long at the close of the candle until 7:40, exiting at the signal, watching for a breach of the blue line. 8:25 before the PPI report, our stop is hit, minus 5. 9:10, we don't puncture the blue line. It comes, it closes below the moving average. This is now a counter trend signal. I'm waiting for a breach of the white line, which is 1.5 average true line values away, and I'm short until 11:10 plus $37. 11:20, I'm short until 11:20. I give $7 back as my fee to play the game. We close above the moving average at 12:05. I'm waiting for it to hit the blue line. It doesn't. The next signal at 12:15 is a signal with trend. It has closed above the moving average and I'm long until 12:50 plus 7. What am I waiting for at 12:50? A violation of the stop line in the direction of the trend. This is called a puncture. We've taught it for 15 years now. We'll write it there so you remember. We do, in fact, breach the line right here at 497.25. Our stop would be below the candle that punctured it at 491.50. We are long until the close of the 14:05 candle plus $18. 14:05 is a signal with trend. We are long until 2:35 plus 12.75. We puncture the blue line and we fail and give back 8 of those dollars. So we're logging our winners up top and putting our losses in the lower left corner. The very next signal is at 3:15. Between 3:15 and 3:55, we log another 18-point winner. We miss the puncture by 1 tick by the end of the day. Okay, without a calculator, 8, 45, 52, 62, 70, 82, 75, 92, 75, 101.5. Let's call it 100. Minus 7 is 93, minus 5 is 88, minus 8 is 80. We'll call it, just for round numbers, plus 80. So across 2 days worth of signals, using times that we had published beforehand, Thursday and Wednesday, using those times and a pre-canned system that we gave you before you came to the webinar, Tony, I'm now absolved of all responsibility. All my job is to do, all my job requires I do, is just go through the setups that I told you we would go through after we passed through the projections. Can you see how powerful that is? I don't have the fancy accoutrement, right? I don't look like an attractive 32-year-old woman with lush conditioned hair and a fan blowing in the background where I tell you how trading is so easy, and I give you all of my accolades and invite you to take part in my free course. I don't know how to do that stuff. I really don't. But I know this. I know how this stuff works. And it didn't stop yesterday. They've been manipulating the markets since beforehand. There's the day before. And you can see what the signals did the day before. They're not curve fit. They don't repaint, disappear, and repaint. They don't appear after the fact. We know when the signals are coming in advance. And I can go back day after day after day and show you example after example after example, where if we waited for a time, a very important thing happened. Any questions about that? So plus 80 yesterday, minus 2.5 today. I don't think that's too bad. I don't think that's too bad. We actually looked at it in our room today on a 1-minute chart. We looked at it on a 1-minute chart on the MNQ today, and we actually traded with it live. Same accuracy of setups and signals. I was particularly happy with our MES this morning on the 1-minute chart. You've seen my posts on social. And I was super excited. My results today on the 1-minute MES were particularly glorious. I was very excited to be trading with that one today. The NQ was a little rough, but I have the video showing the times in advance, showing what we would do when we got to them live in front of 40 people. And so I don't have any cards up my sleeve. There's no way to manipulate the results. And so here's the best part of what we do. Coming into tomorrow, I already have the times for tomorrow. Coming into tomorrow, I already have the times and directions. How do you think you get them when we publish them in advance? And so having those times ahead of time gives us an advantage. We know when they're probably going to stick their fingers in the cookie jar. Here's gold on a 5-minute time frame. Gold on a 5-minute time frame. Now, what's interesting about gold is this is a market that JP Morgan got caught manipulating. They got caught. For what? Manipulating precious metal futures. They got fined $1 billion for manipulating precious metal futures. This is a precious metal future. This is the chart that we gave you 3 days ago. And we invited you to see if they would drop the price at 230, raise it at 350, drop it at 510, 7, 840, 1005, 1045, 130, and 240, vice versa for these. If the fine was big enough, if these men feared any governmental fine or penalty, they would have stopped. Wouldn't that be encouraging to know that your opponent has some fear of retribution? Signals plus setup. What time was the report this morning? 8:30. What do? We exploit a statistically relevant edge over and over and over again. 6.2. Negative 1.3. 19.4. 2. Stop loss, -5. 5 at the moment. 3. $6, $25, $27, $32, $35, 30, call it 28. They're still manipulating them. They didn't stop. It's too profitable. They were like a gang in Los Angeles going from Walgreens to Walgreens. They're like a gang going from Walgreens to Walgreens looking for loot. And they know they don't go to jail because their stuff costs less than $1,000. They get a ticket. $1 billion fine to the people you trade against is a ticket. Tony, otherwise, these times that were published in advance, what the hell is going on? We're waiting for a move down at 925, up at 1010, down at 1055, up at 1105 until midnight +5. Down until midnight 40, up until 2:30 a.m. Asian session. Whee! Down until 3:50 pre-UK session. Whee! 510 comes, trying to go up. Can't do it. Nope, we're selling into the move. And so this is as heavily a manipulated market, as heavily of a manipulated market as any. And they already paid $1 billion to be part of it. And they're not going to stop. They keep doing it over and over and over again. If you're a brand new customer, I want to give you a piece of advice. If you're afraid to have too big of a risk, put your stop right underneath the signal candle. Enter at the signal candle, forget this stop. Try your risk as low as you can. Try to short it here with a low risk. Put your stop right under there, Tony. Put your stop right above the candle you're shorting and right below the candle you're taking a long of. Ignore these stops completely. And just put yourself in a position where you go, oh, it's 2210. Let me try to short it and put my stop right above the signal candle. These guys don't fool around. The longer I use this software, the longer I watch you use it, the more people who come up to me and say, I don't use as big a stop as you show in the webinar anymore. I'm buying right on that candle and putting my stop right underneath it. Well, did you analyze a dual purpose trend line? Did you have a safety line? Did you have a trend line with 3 contact points? Did you use the ICT method? Was there a fair value gap? What was the delta on the volume? Fundamentally, what did we know about that candle? Dude, it just said 2310 and it was buy. And I bought it. Oh, that seems a lot easier. Any questions before I continue? Any questions before I continue? When we're looking at a large time frame, are there ways to know how far something will go? Are there ways to know how far a market will go? So Tony, if you're looking for puts or longs, how far will the market go in that window? This is a pretty neat technique. It only takes a minute to do it, but once you see me do it, you'll know how. I'm going to take from the low of every buy dot to the high of the next sell dot. And I'm going to draw an arrow from the low to as high as it got. From the low to as high as it got. From the low to as high as it got. From the low to as high as it got. From the low to as high as it got. from the low to as high as it got, from the low to as high as it got. So Tony, can you see why I drew those arrows the way I did? Mary, does that make sense to you? I'm measuring the exertion of the signals historically when they occurred. Bala, does that make sense? Is my microphone working? I feel like this is a bad webinar maybe because either it's really great and you're loving it and you're real quiet, or I'm somehow lulling you to sleep. Which is it? Are we good? Someone type good. I need a modicum of encouragement every once in a while. I am ego driven. Okay, cool. Thank you. So then what I'll do is I'll take these arrows and I harvest them like blueberries. And inevitably, one of three things begins to appear. So sorry. I had a pretty rough week this week with people who didn't necessarily believe that any of this was true, despite all of the trades, the live executions, the proof. What ends up happening is there are three exertion levels. There'll be minimal levels. Then there'll be like an average where a bunch of candles are going to line up. And then there'll be a maximum. And so the way I've learned to annotate them, I call them the min, the median, and the max, or the outlier, the one that just really surprised everybody. And you'll be surprised that the median doesn't get hit 2/3 of the time or more. And so, yeah, Yasher, the settings for this chart are the same as last week and the week before. I'm using a 1, 2, 3, 0 trading days with a swing strength of 5. 1, 2, 3, 0 trading days with a swing strength of 5, 5, 3, 4, 5. So when we come over here and we start to put those arrows underneath, I'm going to try to do this the right way. We're just creating an aggregate, a composite of how far it's likely to go by the next signal. And these little arrows, you'll indulge me, I'm having trouble grabbing them, and I'm just going to put them over here like that. Okay. And so now, Larry, Tony, when that signal closed on the 6th, 3,650 days, 10 years of data if you're loading a daily chart. 10 years of data if you're loading a daily chart. So when Friday closed, I have a median, a maximum, and a minimum. The median, I've got 3 arrows right here, Mary. The minimum, I've got 3 arrows here. And now, Tony, here's my outlier. Ready? How close am I to the outlier, guys? Right? There's 1 arrow there. There's 1 arrow here. There's 1 arrow there. So when this candle closed, I knew that at the very least, I was going to hit 54.51. I knew it had the highest probabilities of going back to 54.50 or 50.51, sorry. 51.50 is the best Van Halen 51.50 is the best Van Halen album, especially if you're a Sammy Hagar fan. And now right here between 605 and 620 is about as greedy as I can get, because that's about as far as these moves, when they occurred historically, have gone. Does that make sense? I simply look and see how far does JP Morgan go when they go. Well, we've got a Volkswagen Beetle, we've got a Land Rover Defender, and we've got a C7 Corvette. Those are the three cars we've got. So they've got a 4-cylinder engine, a 6-cylinder engine, and an 8-cylinder engine. Sometimes they drive different cars, but they only have 3. Is that a good example? So I can look and see. I used to do this all the time, every week, and then I focus more on the signals and the setups intraday. So when we're looking at an equity on a daily chart, we can do the same things. We can look at a stock Apple chart, change it to the setting on the daily that I just had, and get a sense of when those highs and lows in Apple are coming. Long from Friday, September 6th until Wednesday, September 18th. Where do you want to put, Tony? I want it on 829 on Apple, and I'm going to have almost no risk right there above the candle. What kills people is when I do this, and I show the sell signal on September 18th, the 27th, October 9th, and October 18th. When I show the buy signal on September 26th, October 7th, and 10/14. Why does that kill people? I had probably 100 comments across 10 trading groups this week when I posted the times for the SPY move up. And I said long from Friday to Tuesday of next week. People lost their minds. The stock trading groups, oh, if anyone needed a massage and a glass of herbal tea, it's the equities guys. Because now all of a sudden, what am I questioning? The fundamentals of their market. Well, you don't understand. You know, Ozempic's just gone through stage 13 trials now, and they're testing it on elephants and orangutans. There was an orangutan who lost 12% body weight in 14 hours. I don't care. There's a buy signal on September 6th. I don't look at what banks say. I don't look at what reports say. All of those things are manipulatable. I look at what they do. What are the people who move markets actually doing, and when do they actually do it, and when do they actually stop? Actions versus words. And when you put that element into the equation, if you believe that markets are efficient and we're all making decisions on the value of that instrument, what I'm proposing, if it works, oh, everything you're learning and doing and have practiced is sort of meaningless, at the very least less relevant. But isn't this easier? Isn't this easier? Right? Let's check Muscaverse. There's the Muscaverse. This drives people nuts. Well, he's releasing the robo-taxi, and then we've got the Optimus program, and of course the Cybertruck recalls were detrimental to the sale of the stock. And, you know, with the XAI program and the new gigacomputer, I don't care about any of that. There was a buy signal on the 2nd, a buy signal on the 23rd, and then I have congestion between September 25th and September 27th. That's all I care about. And I can come over here and look at the most liquid stocks by volume and see Tesla, Apple, AVGO. Okay, AVGO. What are they doing versus what are they saying? Too many signals. Let's go back to the default template. There you go. AVGO had a buy signal September 9th. AVG had a buy signal September 9th. How far is it going to go? Well, How far did it go? Did they take the Volkswagen, the Defender, or the C7? Here to here, here to here. We can go back and look at other signals. Here to here, here to here. I sound like the Swedish chef from the Muppets. Hurny gurney, here to hurny, here to hurny, here to hurny. And now I just come over and I bring them. And I look and see. It takes about 20 seconds. But you have to believe it. You have to believe it. So we've, on AVGO, blown past the minimum. We've blown past the median. What's next? The maximum. Friday, September 20th. We've already gone through the minimum. We've blown through the median. The maximum is at 181. So the narrative is what? They will most likely run the stops leading up to the sell signal before it drops down. Before it drops down. You start to see the manipulation in the chart as you study it. ES 1 hour chart. Hey Jen, welcome to the program. ES 1 hour chart. Let me take a look real quick at something. Yep, we're good. So when the trend was down, Jen, what were we looking for? What was our bias? Down and punctures, right? Punctures of the white lines and sells at the blue lines. And so Jen is like, hey, can you scoot your chart a little bit over? Yeah, I can scoot it over for you. 1, 2, 3, 0, trading days, swing strength 5. And they're not the best settings, Michael. They're not the best settings. I can find the best settings with you if you want. Tesla is a weird one that I love to hate. So Jen, we have a long signal until 10 o'clock tomorrow on the hourly, and then 10 o'clock down until 1 o'clock, up until 4 o'clock. But the conglomerate, the number of all those signals together, if we add even more data, what is the statistical relevance of the signals? That's the chart you want to see. Let me take a screenshot of it. You can hang it on your refrigerator later and stare at it. Oh no, you're welcome. I love this stuff. I love people who are open to it. The ones that are skeptical and tell me it would never work are the ones I have problems with lately. Yeah, so if we go back to Tesla, what's interesting is there are usually a number of settings that we can apply that work really well. 714.8 is the generic all-season radial tire setting. Then I start drifting into the trading days. And you'll notice, Michael, that it starts to sharpen up a little bit, right? Here, we'll bring this down so we're not focused on that as much. So just changing it from trading days to calendar days alters the narrative, right? Then there's a couple things you can do. The first thing I look for is a 3-day, or in this case, a 3-week cycle. And that appears to be what we're closer to right now. A 3-week cycle appears to be better. And then we can actually draw the swing strength down a little bit and start to get a better picture. The other one is a 9-day cycle. And this is very rare that we have to go that far. But you notice how the 9-day cycle tends to lock it in a little bit better. So Tesla's 9-day cycle and 900 swing strength 5 trading days is better than what we had earlier. Generally speaking, though, almost every other stock works well with the defaults. But there's a couple you can try. Any questions about this? Or anything else we've been looking at? Here's crude oil today. Again, if you showed Tony's admonition, if you showed more historical results, people would be more inclined to purchase. I would rather give them the signals in advance and invite them to hang out with us today. You're welcome, Michael. And Michael, you can always hit me up on the Skype group. I can build custom templates for you if there's a market you're really trying to drill down on. I'm happy to do that for you. 745 on CL, down, 812 up, 833 down, 906 up, 930 down, 10 o'clock up, stop out, 1036 up, puncture, 1157 up, 1224 down. Where did the times come from? Right here. CL 3-minute Thursday. Those are the times, whoops, that we gave you 2 days ago, 3 days ago, added 3 days ago. That's what happened in oil futures. It happened yesterday. Those are the times for oil futures yesterday. So Tony, I don't want to give people historical. I want to give them the times in advance. And then they come back and they go, there's no way those times were published for oil yesterday. Holy cow, those were the times from yesterday. 8 o'clock, 9:06, 10:03, 10:33. 8 o'clock, 9:06, 10:03, 10:33. 6:42, 6:42. Explain that to me. Right? Tony said something earlier. He said, hey, everybody out there has a mouse what did you call it? A different mouse catcher. And I thought about it, and it's true. How do you discern whether someone is telling you the truth or not about something that they've made for you? Well, number one, I'm a degreed college degreed engineer. I've been making things my whole life. I'm a co-inventor on 6 US patents. I make stuff that works. Most of the tools that I've made in my life were for people to make their lives and their jobs easier. I've built work aids. I remember we built a semi-automated sewing machine. And if you've ever gone into a sewing factory, most of the workers are women that weigh less than 100 pounds. And their managers ask them to move these heavy materials around in bundles and piles. We made a machine, I designed a machine for a woman that automatically moved this panel of material that was 60 by 80 by 4 inches thick with foam inside of it. It moved along an air table, like a hockey air table. It was grabbed and manipulated by belts and moving arms. And at the end of the day, she said, my hands don't hurt. I don't feel tired. They looked at her numbers and she made 30% more than she made the day before. She made 30% more money because of a work aid that we built for her that did all the heavy lifting. So when someone says, why do you do what you do? It's what I've always done. I see a thing and say, that's too hard. There has to be an easier way to do it. How does this process really work? What's the most efficient way to do this? And after 15 years, this is the most efficient way to trade. There is no better way to trade. I'm sure you're convinced if you have a thing that's not this, that your way is better and easier in all the ways. But if we sat down and looked at all the steps you take and all the mistakes you make and all the trades you took you didn't need to take and all the stops you moved and targets you moved, I win. after 15 years of staring at one blade of grass, how time affects markets, I win. That transfers over to another question. Can you actually teach people to do what you do? And the answer seems to be yes. The answer seems to be yes. When people can write whatever they want and come to the page that I can't post fake reviews to, people that actually have the software and paid the money for it, they seem to walk away with the same perspectives. They seem to have the same experiences. When we ask them to post their results in the rooms that we have, like our Skype group, they seem to be having the same kinds of experiences. And the customers are sharing their setups and their entries and their exits, and they're saying the same things. I did really well today. And they're posting their gains in the room without me telling them what to do. So that more important answer of, can you tell me or teach me how to use it? The answer is yes. The answer is yes. So we've proved that it works. We've shown you through our experiment that it does. We've gone through the examples before and after, applied a simple rule set to them, and walked away with 75 points on the ES after 2 days. 75 points is $3,500 per contract in 2 days. About a 55% win rate with a 2-to-1 profit factor. But we're left with this uncomfortable realization that without it, if you believe these guys aren't doing what they're doing, and that your trading computer at home with your fiber optic cable internet connection and your super caffeinated beverage in the morning is somehow going to alter the odds, that the influencer you're following today, who will change the name of their company tomorrow, will somehow circumnavigate the probabilities of failure? I don't think so. This is the reality. And after 15 years, I've concluded it's time. It's time. Time is the missing element for anything you're trying to do. I want to extend my targets. It's time. I want to trade less. It's time. I want to stop blowing out my evaluation accounts at Apex Trader. It's time. And you have a whole team of engineers with 15 years of experience and hundreds of Trustpilot reviews and happy active customers to support you that are kind of gesturing from the other side of the fence. Come on, it's okay. I want to thank you for your time. If you're interested, please visit us at backtothefuturetrading.com. The program that we're looking for you to come on board with is called Tachyon Warp. All the information you need is there to get started. I would love for you to join us today. Bear in mind, when you purchase, there is an actual class that I teach every Tuesday, Wednesday, Thursday, where we show the entries and exits in the market. And I post where my entries and exits were. I tell everybody where I'm going long and where I'm going short and why. And so if you want to have that experience as well, simply add that to checkout. Have a wonderful evening. May the wind be at your back. May the sun shine on your face. May the valley rise up to meet you. May the mountains lay low before you. I've shown you everything I know. I've made the argument in the case for this. And if you were led here today and you believe this is for you, I welcome you to our family. If you don't think it's for you, it was probably never going to be for you. And I just tell you, be careful while you're out there. It's an unforgiving landscape where the fines are never big enough and no one ever goes to jail. I love you all. I'll see you next week. Have a great day. Bye-bye.